first episode of the Craving Crypto podcast, where we go over the markets and then talk a little bit about some things that are happening in the space or a weekly topic. And then we get into some questions and answers. I break down why cryptocurrency is going to surpass everybody's arguments against it failing. And just, keep you updated on the markets and keep you all learning and keep you all interested and updated on the news and the information that's happening in cryptocurrency. So let's get right into this. Okay, so the way that this is going to work is we have a weekly document, or because this is a podcast, you'll just be able to listen to me read this through whether you're exercising or at work or doing something else. But essentially, we just have an outline of what we go over each week, and then we check into the market capitalization, and I do an overview over the prices, and then we get into the weekly topic. And this week's topic happens to be cryptocurrency exchanges getting hacked. My thoughts on that, kind of how cryptocurrency should react as a whole and how the community should look at this type of information, and what you should do personally to avoid any of this happening to you, and some things that you can do to make sure that you don't have your money stolen. And then I'm going to be going over a little bit about some crypto flaws debunked. So as far as these debunked sections go, the idea is I want people to be putting arguments in the comment section below. So if you have something that you've been thinking about that you're just like, okay, I know why cryptocurrency is going to fail, or you think of a reason that it might fail, then you can just go ahead and drop that in the comment section below. And then next week we might pick you as our debunked. So I'll just talk about why I think that cryptocurrency will still succeed even though it has a few issues, and how they'll get past these problems. So this week's topic on that is, can the government shut down crypto forever? And then afterwards we do some Q&A from the comment section. Because this is the first Craving Crypto podcast, I had to take some comments from some of my other videos that I'm just going to reply to and answer. But if you want to be in the spotlight next week, drop those comments below and we might pick you as our Q&A from the comment section for next week. So awesome, let's get right into the market review. I'm headed to coinmarketcap.com to start off with. And we're just going to talk about the price of the top 5 coins. We're going to talk about the volume, a little bit about their percentage chains, total market capitalization, 24-hour volume, Bitcoin dominance, some things like that. So Bitcoin being our number one at 115 billion in market capitalization and $3.7 billion in 24-hour volume. Currently standing price is $6,749.70 per Bitcoin, so about $6,700 per coin. And 24-hour change is 0%. So it's the same exact price that it was 24 hours ago. This is just low volatility currently, and this is actually pretty common when you get closer to bottoms of markets, because they generally just trend sideways instead of impulsing up or impulsing down very hard. And that's kind of what's happening here in cryptos. There's a lot of low volatility currently. And then Ethereum, its current market capitalization is at 53 billion. Current price is at $534. Volume is about 1/3 of Bitcoin's at $1.5 billion. And 24-hour change is minus 0.24%. So basically the same as Bitcoin, roughly the same price as it was 24 hours ago. Total market capitalization across cryptocurrency is 288 billion. 24-hour volume is 12.6 billion, and Bitcoin dominance is at 40%. Ripple coming in at the 3rd place with a $21 billion market cap, and the price being 53 cents, 24-hour volume being 247 million, and the 24-hour change being a little bit lower. This one's down minus 1.73%. Bitcoin Cash is $15 billion, coming in at the 4th place, price at $886. 24-hour volume is at 414 million, and percentage change is minus 1.25%. And then EOS coming in at the 5th place, $9.3 billion market cap, $10.42, and about double the amount of volume that we're seeing in Ripple and Bitcoin Cash at $842 million in 24-hour volume, and down about 2% in the last 24 hours. So those are our top 5 this week. These could change throughout the period of this podcast. In fact, it wouldn't surprise me if a few coins go up past some of the other ones. I still suspect Bitcoin to be number 1 throughout this year, but some of these other coins might pass Bitcoin Cash or Ripple, and EOS could get very close to Ethereum right here. It wouldn't surprise me if EOS gets put into the 3rd total market cap this year, just because of the way that the volume is working, and honestly the chart is looking really amazing right now. So clicking on the total market capitalization, we are coming in for what's called a double bottom formation. So for our listeners, that just means that the prices are reacting to the same support that it was reacting to in April of this year. So we are right about $250 billion in market cap during April. And we had a 1, 2, 3, 4, 5 wave up, taking us to $466 billion. And now it looks like we're coming in for a double bottom formation, again at $250 billion. So that took about 2 months to take place. All through the beginning of May was a little bit bullish, and then May just ended up being a sell-off for the rest of the month, and then into June. So again, back when we were in April at $250 billion in total market cap, we were just going sideways. It was just consolidating, very low volatility. Things weren't moving up and down a lot of percentage. And then when it started impulsing and started making some movement, that's when things got a little bit exciting, and we went all the way back up to $450 billion in market cap. So that type of a move is pretty common. And again, since we're in a low volatility range again today, it wouldn't surprise me if we see a similar thing happen over the next few weeks. Is once this starts impulsing, which my primary prediction is that we start impulsing upwards. Once it does do that impulse, then we're going to see the money moving very quickly. It'll be a lot more exciting than it is currently, and you'll have more volatility. So the percentage, you won't get on CoinMarketCap. Things will be either up 15 to 20% or down 15 to 20%. We won't be seeing all of this minus 1% volatility or 0% 24-hour volatility. But yeah, so that's a little update on the markets and the overview. Again, the Bitcoin dominance is right at 40%, and Bitcoin dominance has been in a major downtrend since 2017. That's really when Ethereum became a big deal, and Ethereum being the first major altcoin to start eating at Bitcoin's dominance. Now we have a lot of other altcoins eating at Bitcoin's dominance as well. This is kind of expected in the space. This doesn't mean that Bitcoin is any less valuable or any less important in the space. That just means that there's more development happening in the space, more people creating ideas, more coins being created, which has its pros and its cons. And if we ever want to do a podcast about this, you know, I can talk about that down the road as a weekly topic. Just let me know if you want me to, how altcoins affect Bitcoin. And also, one other little thing that I want to note, if you are watching this and you're a developer of a coin, or you have a bit of a name in the cryptocurrency space, you know, shoot me an email, highaltitudeinvesting@gmail.com, and I might be able to have you tune in on this podcast. I look forward to having the potential of guests and creators of coins on this podcast down the road. I've gotten emails before from the creators of lots of the major projects in the top 100. And just because the nature of my channel, I never really set up interviews or anything like that. But now that I've got this podcast idea going, I'll actually be able to interview some of these creators and of these coins and start talking with them about their idea and getting into a little bit more detail. So if you are one of those creators and you're interested in potentially being in this podcast, or even just, you know, you've got a YouTube channel or something like that, just shoot me an email and we can talk about doing a potential collaboration and having you on the stream. So awesome. The markets are looking great, still super bullish on everything. The correction since the beginning of the year has been bloody for anybody that didn't have Tether on the sidelines, but for the people that took some Tether on the sidelines and have been accumulating, yeah, your portfolio might be down, but you understand the big picture move, and you understand that when this starts impulsing, all of that accumulation is going to reward you very, very well. So things are looking good, and the market capitalization and all of your holdings are great. There's no reason to be selling anything down here or panicking as far as the technical perspective goes. So again, I want to keep you guys updated from a technical perspective and keep you understanding that your investments are safe. through this podcast. I'm not trying to veer away from my technical analysis at all. I just want to be able to talk about more broader subjects, and a lot of people have been asking my opinions about things other than just TA or the direction of each coin. And since I do a lot of that in my VIP anyways, and talk about exactly where coins are going, exactly where to buy, exactly where to sell, and then I teach you how to do it all in the VIP, figure it's probably better for you guys to be hearing more about my opinions on like exchanges getting hacked, or whether you should be using Trezor wallets, how to sign up for certain exchanges. So that's kind of the idea behind this podcast. All right, so now that we've got the weekly market overview kind of updated there, we'll go into the weekly topic, which is cryptocurrency exchanges getting hacked. And what are my thoughts on this? Well, this has been happening since the beginning of cryptocurrency. I don't know if you've ever researched back into the history of crypto. There's been a lot of exchanges get hacked. Now, people always like to point this out as like a reason that crypto is going to fail, or they like to be like, oh, all these exchanges getting hacked, you can't trust crypto. This isn't going to be sustainable. Somebody's just going to hack everybody's computers one of these days and get all of their money off of it. It doesn't really work like that. The reason that these exchanges are getting hacked is because they're centralized. So a centralized database, and if you're part of the crypto space, you probably know a little bit about decentralized and centralized, but I'll just go into some short description of this in case you are more into crypto from a trading perspective and you don't really understand the technology as much. A centralized system means that there's a bunch of servers in a building somewhere that somebody is using electricity to host the servers, such as Facebook, Google. Any of these companies use centralized databases. So all of your data is stored in a building, a physical facility that you could go drive up to and look at, or could technically get attacked, or if something happened to that facility, such as a nuclear explosion or something, it could wipe out that data. Whereas a decentralized system, everybody that participates in the system helps run the system, meaning that there's no central location where that information is stored. Everybody holds that information in a decentralized manner. And that's what cryptocurrency is based off of. That's how the blockchain works, is everybody participates in the system and everybody participates in the server essentially, and it makes it so that there isn't one single point of attack. So again, back to centralized servers. Facebook, somebody can hack directly into the Facebook servers. Now, with Facebook, they have pretty good security, so it's hard, but it's still possible. And same with, again, back to these crypto exchanges. A lot of these crypto exchanges are just public centralized servers that somebody can hop right into or potentially exploit or get into that system using all sorts of different methods. So whenever you have a centralized system, there's a security flaw. There's an inherent point in which they can kind of peek on in and get where they need to go if a attacker decides to. So this is what's been happening with crypto exchanges, and really it can happen with banks too, by the way. Somebody can hack into a bank and adjust it. It's not like any different with crypto. It's all just data. It's all just digital storage. And again, it's just because of these centralized servers. So one of the things that I have been thinking about is, how does this affect crypto? And I'm sure a lot of people have been as well, is like, will this be a bad thing for crypto if these exchanges keep getting hacked? And honestly, it's just like anything else. If they get hacked, some money will get stolen, but people will learn from it. People will not continue to put their money on centralized databases. And I'm going to talk a little bit about how you can avoid this in a second. But there's some technology that takes the Bitcoin technology or the blockchain technology that allows things to be decentralized and applies it to exchanges. One great example of this is the BitShares network. So if we go back to coinmarketcap.com and then you can just search for BitShares. If you're a listener, you could hop onto the BitShares website. It's just bitshares.org if you're interested in looking this up as well. And this is a functioning decentralized exchange. So this is an exchange that runs on the blockchain and allows people to make trades back and forth in a decentralized manner. So this allows it to be unhackable. You can't hack inside of a decentralized system because everybody's helping run the system. So there's no central point of attack. So it's 1,000 times more secure than any of these centralized exchanges, excuse me. So I do think that exchanges getting hacked has somewhat of a short-term negative effect on crypto. Not necessarily the price so much. I don't like to attribute movement in the markets to the price movements in the market to news, because I have personally found that using technical analysis and market cycles will give you a much more accurate description of where the price is going than following news stories will and worrying about the news. But I do like to be aware that people's money are getting stolen, right? So whenever you have an exchange get hacked, that still means that people are hurt. There's a loss there. It's not just like that goes, it's not like that goes unnoticed. Somebody gets hurt somewhere. And so I do like to think about that from a perspective of not necessarily price for crypto, but what that means for crypto and how that could be negative on maybe some of the developers having their money on these exchanges, or maybe a major coin had a lot of their holdings on that exchange and now a hacker has access to a large percentage of the supply. Like for example, maybe 80% of a certain coin is on a certain exchange. If there's, I'll just use some random example. Say there's a coin called Moon Coin. I don't know if that's a real coin or not. I'm sure it is. And it has 1 million Moon Coin, and 800,000 of those Moon Coins are on one single exchange, and that exchange gets hacked, and then all of a sudden a hacker has access to 80% of the entire supply. They could dump and manipulate the price quite a lot at that point. So it is something to be aware of and something to think about. Now, thankfully, crypto is one of the most liquid markets in the world, and it's becoming more and more liquid. It's not like the stock market. The stock market, if you have a stock brokerage account, you can trade the US stock market. With cryptocurrency, anybody anywhere in the world can get into this. So it's less centralized than the stock market is. It's less centralized than any other database or system is in the world. So it's not something that you really have to worry about with the big coins like Bitcoin. Nobody could ever hack one exchange and get 50% of the Bitcoin, because there's not a single place where 50% of the Bitcoin is held. It's so distributed. It's so distributed to the people that there isn't one place where somebody could get their hands on that much of it, which is a good thing for us, and it's a good thing for the price, and it's a good thing for traders, because you don't have to worry about that happening or somebody taking all of that money. But I really believe and hold true that decentralized exchanges are going to be a big deal because of all these hacks happening. You have Mt. Gox, you have, the list goes on. I don't really want to get into all of them. I mean, I even remember when Poloniex back in the day, when I was trading Ripple on Poloniex, and Poloniex funds didn't get stolen from Poloniex, but Poloniex got DDoSed right when Ripple was pumping really hard. And because of that, the price of Ripple was crashed pretty significantly in that DDoS, and a lot of people lost a lot of money on margin. And I know somebody that lost 50 Bitcoin in that specific situation. And it's just like, it is something to be aware of. So I think that people will move further and further towards decentralized exchanges because the motive is there. So although short term, these exchanges getting hacked is a bad thing, and people are getting negatively affected, and my heart goes out to those people that lost money, because I understand how that can feel if that happens to you. But long term, this can actually be a good thing, because it incentivizes people to use decentralized exchanges, increase overall security, and long-term increase the sustainability and the bulletproof vest of cryptocurrency, if you will, the armor, the shield of security. So again, that's kind of my thoughts on BitShares and how that affects it. There's a few other ones in the market that you can actually use. There's this one called Ethfinex, which is an Ethereum-based decentralized exchange. I believe Binance is working on a decentralized exchange themselves. And I did want to touch on a little bit about exchange tokens too, because I feel like this is a nice cross correlation between the two, and I've been tweeting about exchange tokens. If you go follow me on Twitter at highaltitudeinv, you will see some updates that I've been doing about these exchange tokens and some of my thoughts on them. And I'll just read you my tweet. Everybody is obsessed with the idea of security tokens being a big deal this year, when I think exchange tokens will take the spotlight, such as BitShares, Binance Coin, BNT, KuCoin Shares, BIX, and HT. So those are the ticker symbols. These have real-world use cases, and it doesn't matter if the coin prices drop or rise, they will be accumulated for fees. So when I say that the coin price is dropping and rising, I mean that even if cryptocurrency kept dropping in value, even if we don't get the bull market that I see coming, technically these exchange tokens will be accumulated because people will still be making money off the volatility. So it doesn't matter if the price is going down or up, people will be buying these tokens so that they have less fees when they're trading on these exchanges. So it allows these coins to hold a lot more of their value. And it works out really well. If you compare Binance Coin versus Bitcoin during the correction, Binance Coin held a very strong trend line. And when Bitcoin was going for 1,200, just shy of 1,200 per coin, got rejected and came all the way back down to 6,400 per coin, Binance Coin not only held on its trend line, but pumped in that period of time. And then again, when Bitcoin started getting rejected at the the $9,800 levels, just below 10,000, when it was getting rejected there, we saw Binance Coin drop a little bit, but then it pumped and held its trend line and continued seeing some upward movement. So that means that these exchange tokens are holding well during corrections, even against the mothership, the biggest coin in the whole network, the blockchain, the Bitcoin, the number one. So that's important to take note of. And I also really like these exchange tokens because they have working platforms. So whenever you're looking into cryptocurrency and you start buying coins, you don't want to buy some random coin that doesn't have a real world use case or a reason for people to be using it. These exchanges have reasons for people to use them. They will continue to be used. And again, it doesn't matter if these coins are going up or down in value, people will be buying these exchange tokens for fees. So it's really a good thing from that perspective. So I am watching these exchange tokens a lot. I personally think that they'll be a bigger deal than quote security tokens. I remember going to Consensus this year and everybody was talking about security tokens. Like it was going to be such a big deal. And I understand their perspective, but I like to focus on what's happening from price perspective on these coins and then what I can see for myself. And what I can see for myself is that these exchange tokens are real. They have functioning platforms. People are accumulating them. They're holding their value well. And a lot of them have the potential to see very strong uptrends throughout this year and into the next year possibly. So I'm kind of paying my attention to those specifically and allocating quite a significant percentage of my portfolio to those coins. And I've been a long-term holder of BitShares for a long time now because I love the technology. Aside from my short-term portfolio, I have a lot of different coins in long-term. And it's just, it's a great platform. And same with BNB, Binance. I really love the Binance exchange, and they announced that they're working on some decentralized exchange stuff. So that's pretty awesome whenever that can kind of get, taken to the public. But as you can see, this just has a strong trend line, holds its value well. And since February in the correction, if you had your money in Binance, you didn't have to worry about the correction because it just consistently increased in value. And it's increased in value against Bitcoin as well, meaning that it's held its value better than Bitcoin does. So that's pretty awesome if you ask me, to see that happening with some of these coins. So, cryptocurrency exchanges getting hacked just allows for more decentralized tokens, and a lot of these exchange coins are going to be a big deal, and a lot of them, I believe, are a great place to allocate some of your money towards. So now let's get into the crypto flaw debunked for the week. This week is, can the government shut down crypto forever? So this is kind of a pretty detailed kind of discussion because there's lots of political arguments for both sides to this. And personally, I think it really breaks down to one thing. Can you get everybody in the world to agree about one thing at the same time? No. I don't care who you are, what you are, you can't do that. I think that maybe one or two governments could ban it, but this is software on your computer. So unless internet service providers start banning the protocol being ran on their networks, which is one way that a few different specific countries could at least make a short-term attack on cryptocurrency, you can't really stop it. This is like BitTorrent. It's decentralized. There's not a central location where you can come to somebody and be like, turn this off. Nobody's going to turn it off. And also, I believe personally that a lot of governments, although governments and banks are made out to be the type of people that would completely shut this down or try to make a full-blown attack on crypto, I actually personally believe and this isn't a political stance, this is just somewhat the truth, that when people see a technology that's useful, it doesn't really matter how corrupt the specific organization is. If they see something that's going to benefit them and the people, they'll use it. And in my opinion, cryptocurrency has just as much to benefit the government as it has to benefit the people. And there's a lot of arguments against that, and I'll tell you why there's a lot of arguments against that currently. If we just go into Google, and then we go into the market cycle chart. And for my listeners, I will be kind of just talking about what this chart says. This chart is just a common graph explaining the cycle of human emotions that is involved in the standard cycle. So when something is undervalued to when it gets overvalued and then back to undervalued, preparing to get overvalued again. So as we all know, these prices go up and down, and what goes up must come down. So this is just the easiest way to kind of take that and display it based on human emotion and graph it. So it starts off with disbelief, and that says that this rally will fail like others, meaning the price going up will fail, it won't continue to. And then it goes into hope, so people start to realize that the market is going up, they have hope for it going up. And then optimism, that's when everybody realizes that this is definitely going up because it's done nothing but go up since the disbelief phase. And then belief, and that's when people are like, okay, it's time to get fully invested in this. It's time to go all in. As people start making bad trading decisions. And then thrill, that's when people start to buy more margin and tell all of their friends to buy. And then euphoria, that's when everybody's screaming, I'm a genius, we're all going to be rich. And then you get complacency. This is when the market starts going back down the other direction, by the way. We've topped out. Complacency, we need to cool off for the next rally. So that's when everybody's like, I don't know, I think this is going to keep going up. And then you have anxiety. That's when people start getting freaked out because they put too much margin in at the top. And they're like, oh, this dip is taking longer than expected. I don't know what to do. And then denial. They're like, my investments are great companies. They will come back. So that's when people start saying, oh, there's a fundamental reason that my money's safe. There's a fundamental reason. It's okay. I don't have to worry about anything. And then panic, that's when everybody starts selling. Again, the price is now below the point in which it was in the rally. So we've already started to drop off pretty hard on this graph if you're listening. And that's when people are like, shit, everybody's selling. I need to get out. Capitulation, that's when people go 100% out of the markets. So that's usually when people are like, okay, I cannot afford to lose any more money. I'm going 100% back into the dollar, which is actually a really bad thing to do based on risk management. You should always have a certain percentage in the dollar and a certain percentage in your investments. But that's a whole other thing. I'll get into that in a second. Well, I don't really need to because I've got a bunch of videos about risk management on my channel. And then anger. This is when people are like, who shorted the market and why did the government allow this to happen? So do you notice how there's a lot of people in the markets right now talking about how the government caused this to happen, or how there's the manipulation by the cartels and the government are going to keep causing Bitcoin's price to drop? And they have all these crazy ass conspiracy theories as to why that is dropping. When really at the end of the day, I believe that although the government is corrupt in a lot of ways, and a lot of governments are corrupt in a lot of ways, I still believe that people see technology for what it is. And with Bitcoin being as big of an idea as the internet, the government will see it for what it is, and they'll allow it to do its thing. You know, they've already set in their regulations so that they can tax it, so they're going to let it go crazy so that they can make some money off the taxes. And it's at a point currently where I don't think the government is going to try to fight it. And even if they did, they would have to try to go after every single company on earth, tell them that ISPs can no longer allow it, and that would have to be a worldwide thing. So you'd have to get in with the, you'd have to start to talk with the, you know, every single government across the map, and you try to have to shut it down everywhere where it's happening. And I just don't think it's worth the resources for them to do that, especially since it's a good idea. I don't see the argument. I don't validate that argument. I get it. I know where people are coming from, especially when the price drops a lot. They want to create crazy ass conspiracies as to why it's happened, and they want to start blaming the government because that's what everybody blames for everything. I don't know if you've ever noticed that. And it really just ends up being a thing where, yes, the government technically may be able to do an attack on crypto or try to shut it down, but the probability of them actually being able to shut down something like crypto is next to zero. It's a pretty bad argument for cryptocurrency failing, in my opinion. So again, if you guys have something that you want me to debunk, drop it in the comment section below, and I'll talk about my personal thoughts on it and why I think crypto will just moon right through all of the FUD and just continue to blow people's minds just like the internet did, and just like any great technology with a real world use case does. Because once the jack is out of the box, people won't stop thinking about it. So I don't think that that's a very valid argument for crypto failing. All right, so now let's do the Q&A from the comment section. Again, these are 2 comments that I took from my video, some previous videos that I've made, but if you want me to do your questions next week, drop them in this video below, and you might get picked as my questions and answers reply. So this person, his name is Verheiden Yannick, and I apologize if I can't pronounce that properly. These names are non-American, and to be quite honest with you, my pronunciation isn't exactly A++. So yeah, I apologize for that. But he says, can you do this when you are 17? And he's asking if you can get into cryptocurrency and start trading it if you're 17. Technically, there's no legal age limit for purchasing crypto or owning crypto or getting into crypto. So yeah, you can do this at any age. It doesn't matter how old you are, how young you are. You know, I got into all of this when I was 17. Just to give you a little idea, my little brother is the one that told me about it when he was like 13 or 14. He was like, there's this coin on the computer that you can mine and it's worth real money and it's made a bunch of millionaires and it's like actually cool. And I was like, no, that's BS. There's no way that's real. I was like, that sounds stupid. I don't believe you. And so I looked it up, and then I fell in love with the technology. I figured out it was an amazing idea, and it really was a great thing that the world actually needed and needs to this day and is using. And you know, that was really the beginning of the rabbit hole for me. And then Andreas Antonopoulos, listening to some of his podcasts with Joe Rogan, then sparked some more interest for me. And it just, you know, I just spiraled into this passion that I have today for it. So yeah, you can do this at any age. I actually encourage the young people to be getting into this. A lot of the top buyers of Bitcoin are young people. Millennials are now searching how to buy Bitcoin more than how to buy gold. So that means that the Bitcoin to gold graph is clearly, gold is getting eaten up by Bitcoin as far as demand goes. So yeah, young people can get into this, and it's highly encouraged that you do. Now, we have a question from Affluent Ishmael. Again, pronunciation thing. Which is better, holding or trading? Honestly, it depends on what you want to learn. If you want to be a hodler, if you want to be an investor, the opportunity is great with crypto. It's amazing to buy and hold and let your investments do your thing. Now, I will say that if you are holding, you have to be able to stomach volatility. So you have to be able to watch your portfolio maybe go down 60% or 70% if you're holding your investments. I personally have a separate trading portfolio for my long term, and I don't trade it, I just hold. And then I have a short-term portfolio that I do all of my trading in, and they're completely separate so I don't confuse them. Now, personally for me, I like the trading more, so I allocate a little bit more percentage to my trading account than I do my holding account. But if you don't want to learn how to trade, because the short-term swings can be a little bit crazy to predict, and it does take some education to do so, which again, my website has a lot of great content for that, highaltitudecrypto.io. My YouTube channel has a bunch of videos on the subject that you can go and learn from. Then holding or investing might be good for you. Now, when you're investing in something, I do have one quick little tip. It's best not to go all in at once. If you want to invest in something and say you have $100,000 to invest, I would take maybe 10 coins. I wouldn't diversify too much because you want to avoid taking on too much risk. So I wouldn't do any more than 20 coins maximum for like investing, and even in your short-term portfolios. Because it's just taking on too much risk. You have to think in risk management terms and just pick out the best of the best. But if you're doing investing, you want to average in. So if you have $100,000, maybe pick 5 to 10 coins that you want to buy and put $1,000 a week into all of them, or $1,000 a month. Whatever your strategy is, average in so that you don't go all in at once, so that you're not stressed if you buy too high and then it drops 60% in value. Because you might go look at your investments and be like, oh, I need to sell these. This wasn't a very good investment. And then usually when people start selling is right when everything starts to turn back around, which, by the way, I've noticed a lot of noobs getting really trigger happy with that sell button lately, just saying. So get ready for that reversal, folks. I'm excited about that. So yeah, if you're investing, average in, don't go all in at once. Don't diversify too much, because risk management, you don't want to take on too much risk. And again, it's a personal thing. If you want to take the time to learn trading, technically you'll make more money doing the trading, but holding is a lot less work. You just have to average in over a long period of time, maybe a little bit less stressful, and you can still get really good gains with that. For me, I like to distribute evenly, and it is a personal decision what one you like more. It's not like one is technically better, but one you can make more money doing, and that's trading. So yeah, that's kind of what I have to say about that. And if my Bitcoin address is right here. If you guys like this podcast, I'm always open for some donations towards that. And I hope that you really enjoyed this podcast and it's something you want me to keep doing. If it is, drop that in the comment section below. Let me know what your thoughts are on everything. And, again, if you are somebody that's developing a coin, or you've got a bit of a name in the crypto space, or even just an interesting thing that you want to talk about, shoot me an email. We can potentially go over having you as a guest on this podcast. I want to open this podcast up to as many people as possible. I want to keep it a little bit more versatile than my videos that I was doing previously, where it was just pure technical analysis. I love teaching the technical analysis, but my website has a ton of good information on that, and I've made a lot of videos on it in the past. So I want to kind of broaden my scope here, open up to new things, talking about Trezor wallets and stuff like that. Which, by the way, I forgot to mention really quick before we exit out of here, Trezor and Ledger wallets is how you avoid cryptocurrency exchanges getting hacked. So get yourself a hardware wallet. I personally love them. And people always think, oh, well, what if I get this little USB drive and then I break it and drop it? The way that these hardware wallets work is you store your seed in either a safety deposit box at your bank or keep it in a safe. And it's basically just a string of letters. So even if you have your USB drive, which has your crypto on it, and it breaks, you can always take that seed and recover those funds. It's way more secure than keeping anything on a public exchange, because you're not keeping your funds on a centralized database. You have access to your own private keys. So I personally use both Trezor and Ledger.
links in the description for those if it's something that you are interested in getting in. I highly recommend getting some and keeping at least half of your portfolio offline, off of exchanges, so that you don't end up being one of the victims of these hacks.
Thank you so much for tuning in to this week's Craving Crypto podcast. I hope that you enjoyed it. If you have any questions, drop them in the box below, and you may be picked as one of our Q&As in next week's segment. So I appreciate all of you tuning in. Hit that like button, hit that subscribe button, and I'll catch you all next week. As always, stay profitable out there.